journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, we've got a few minutes here before Bill comes on, and I just wanted to go through a review of yesterday. We were watching this big pattern here in the Dow, the gold. You notice here we hit 29,105, then we dropped about $25, went up and made a new high at 29.05, and now I don't know where we are now. It doesn't make any difference. What I'm trying to point out, I know this looks really bullish, folks, but let me show you something. This is when we made our first high at 28.01. Remember, we had that big break? Now we're making another one on lower volume and dropping open interest. That is negative, boys and girls. That was as of January 31st. I updated it last night, and you'll see the same thing is still happening. This is not a bullish sign for gold. I know it's going up, and it's probably going to go up forever, but that is short covering. That is not new buying coming into the market. You would think with the prices this high, they would be jumping all over. Look what they're doing in the stock market, for God's sake. Well, I guess they are going up. But anyway, that's what I'm paying attention to as we look at these things that we're watching today. Silver also made a slightly higher high by a couple of pennies, but did not make a secondary high when the other market did. Also, we talked about that Canadian dollar yesterday. It is absolutely collapsing. That was a big three-drive pattern that we had right here, and it looks like we've had major changes here. I'm sure Bill will talk to us about the dollar and what he sees there, and then also crude oil continues to keep going lower, which is also another reason to think that maybe disinflation is coming some places, and other times it's going to be inflation. We don't really know for sure, but nobody else does either, boys and girls. All I can tell you for sure is that we do have a couple of patterns. There's one of the Dow Jones right here. There's a 786 with an ABCD. I've already talked to you about the one. Also, looking at the yesterday, we talked about the 382 that was coming down here in the bonds. And you can see there was the parallel channel that was in, and now we've gone up to that higher level right here. This is a 3-point move, folks, in bonds today. That's a big move. Well, no, that's not true, because this is the fourth. There was yesterday's action. Here's today's action. So, and if you look at this on the longer term daily, I still think we had a move up above this. There was the first move. We backed off to the 382. Now we're most probably getting ready to get up to this level. We'll take a quick look here before Bill gets here, and we will take a look at the Treasury notes and see how they're looking, because that's the larger of the markets. And the Treasury notes are almost at the old 61% retracement as we speak right here, right now. There it is. Oh, we got something else that might be interesting. Look at the last rally we had from there to there, and there it is. And we move it over to this one right here. There it is right there. Let's just check the time of the rally just to see if these things have any symmetry at all. That one took 14 trading days, and then we're going to move it over today, and we're going to see this one is this is the 14th trading day. Shut the front door and raise the rent. This is a good one, folks. I'd get ready to sell some of this stuff. About another couple ticks higher, 5 ticks higher, that would be it. So anyway, this is perfect symmetry, as you can see. Now, symmetry doesn't work all the time, but boy, that's about it. You got 14 days up here, 14 days up here, and you're setting right at the 61% retracement. That's a pretty big thing to look at, I would think. Okay, getting back to the gold, I wanted to show you, remember we talked about that GDX yesterday, because it had stopped right at the I want to give you both sides of this, because this thing doesn't look that bearish, actually. There's the GDX. It gapped up above the 61% retracement today, and we're almost at the 78% level. This is the pattern that we're seeing in the futures right there. And that, whatever you want to call this number, 2900, 2905, 3505, whatever it is, a 3 drive to a top pattern. And then this is the thing coming in behind it. So that's another one to really pay close attention to. We can get both of these out of here, and then I want to talk to you just a little bit about the dollar index. If we'll get this out of the way here. Here's the dollar index is right there. Remember, there was the big rally here. We had that big gap up. And of course, it looked like a gap up in the morning there on Monday. And then look, boom, it just came all the way down. And what did we do? We came right down to this old magical level where we were before, 107.04. Now, on the video last night, what I did do was I looked at the pound, and we'll do the pound first since we've got a little bit of time here. Seems that Bill's having a little trouble getting hooked up here. Okay, here is the pound. We have the pull back here to the 61% retracement. This tells us we're most probably going to get up here, and that's still bearish, folks. Look where this thing is. You know, I mean, this is really bearish. I mean, this is where we sold it up here, folks. We covered it down here, and look where it is now. This takes you to a 61% retracement of that move, and from the high that you have right back here, it's going to be there's your 382 is going to come in right there. So I'd watch that 382. We're only 100 pips away from that one, so I would really pick, because I like those ratios, as you know, quite a bit. That would be 382 off of the high. So that's one. But let's take a quick look here at the euro, if I can get everything lined up here. Hold on one second. And I think I can without too much trouble here. And here's the euro right here. And we've had a nice big rally here. Now let's move down. We remember, we've always been following this on the hourly chart because we talked about this move here. This was the day of the big, thing. Remember, on the long-term weekly, that thing stopped right where it should have, right there. Then it stopped, and anything below that would have been super bearish, and it's not. So the dollar's weakening right now, but it's not weakening that much. If you look at this on the hourly, all we're doing now, let's move this over here, is we're completing. See, I thought it was going to complete here. It's gone a little bit higher. Let's measure the ABCD here just so we can do it correctly. There's your X point. There's your A point right here. There's your B point, C point. The ABCD comes in. There's your 61% retracement right here. All right, now we've went above that by about 40 pips. We're setting almost at it right now. So I didn't do any selling in this today, folks. I did some stuff in cattle, but whatever, who cares about that? Well, you probably do. Anyway, that's what we're looking at right here. Just regarding cattle, let's just get this up here and get it out of the way. And we'll see it real quickly. I sold it to 382. Wasn't risking much on this one because it was right on the money, and it's still there. And you can see it. I sold it right there, and it's still there. So it hasn't really moved at all. Most it's moved is about 80 pips. So I've got my stop right above here. I'm not risking hardly anything in that. Take a couple bucks of that meal money maybe, okay? Let's see how we're doing with the time frame. Got 32 minutes. Everybody's asking about Apple. I'll put the Apple chart up as we're waiting for Bill to come, and if he doesn't come, I'll make up something to talk about because we've got a lot of things going on. Apple coming up, folks.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, we're back, folks. I now believe we have Bill online, and I apologize, Bill. I was waiting for you, but I didn't get an alert that you were in the room, so please get started, my friend. I'm sorry to hold you back.
Been here the whole time. Okay.
Okay.
I've got to share screen right here.
Okay.
And that's not it. Hold on just a second, and I'll get it up here. There we go.
Okay. We're in business.
Well, first up, Foundation for the Study of Cycles, June 12th, 14th. We'll be there live in New York. And if you want information on cycles and markets, go to Cycles Research. Cycles, I left the S out of cyclesresearch.com, handles stock market and market-related stuff. And I have a new website, Larry, BillMeridianAstrology.com. People keep asking me about astrology, so I set up a separate website connected to the old BillMeridian.com. So those are 2 websites, and there is a speaking engagement. Now, I started covering Bitcoin, and it looks like we're low right here for 2 reasons. Number one, that is the monthly, that's the weekly Bitcoin cycle. It is at a low, and the green vertical lines are projected turning points, PTPs, which I first learned from George Lindsay way back years ago. Those are day counts, time counts from highs, lows, and they can be daily, weekly, or monthly. So you'll see we have a confluence of the low in the cycle and the projected turning point. And coincidentally, MicroStrategy reports tomorrow. And I was going to recommend that MSTR, MicroStrategy, based on their earnings report and how the stock will react positively. And coincidentally, here we have a low in Bitcoin as denoted by 2 different methods. So that's what Bitcoin looks like from Cycles World. And reasons to be cheerful. Sentiment is very bearish, which is a positive, and stock market cycles point up. That's most of what I can tell you. So here is from Investors Intelligence bearish sentiment. You will notice that there are more bears now than have been since about 2020. Number one. And the cycles Okay, this is a little reversed a bit. But first of all, I have said many times that rectangles are the most reliable and bullish formations according to research done by the Financial Analyst Journal, which is all the guys with the PhDs that we don't have. So if you get a breakout from the blue rectangle, you get 6,100. From the green rectangle, 6,200. So I believe the reason we're hesitating right now, and you see we hit 6,100 and came straight down a couple of times, I think we're in a consolidation range in Q1 that will become pretty obvious when I go through the next few slides. But as I said, the cycles point up. That is the S&P monthly cycle, and there's the weekly cycle right below it. You notice they bottomed together and the market took off. So we don't even have a hint of weakness in the monthly cycle until we get out a month or so. Now here is the NASDAQ cycle, which bottomed at about the same time, middle of the month, when again I had a projected turning point. So you had a confluence or a confirmation between the cycles and the day counts, the time counts, I should say. And here is the 10-year cycle in Q1. This is the 1, 4, and the 10-year cycle, which I've mentioned many times, but the 1-year cycle is the regular annual cycle of the year. The 4-year cycle is the election pattern cycle, and the 10-year cycle is the decennial pattern as developed by Edgar Lawrence Smith. And right now, if we are in the 4th or 5th, we are about right here. And then we get a drop here, which I wouldn't argue with. I think we need a little correction. And February in post-election years is the most bearish month in the entire 48-month, 4-year cycle. That's straight out of Arthur Merrill's old book, Behavior of Prices on Wall Street. Now, this is 2025. This is all post-election years and years ending in 5 put together. And as you can see, first of all, the red is the percentage of months that are higher. So you read this over here on the right side, so that's over 80%, January. It's less for February, and it is the lowest for March. The blue is the percent price gain. You can see that's a loss in March. The green is the product of the first two. The green is the product of the blue and the red. It is the expected return. In other words, the odds that the market's going to go up multiplied by the price change in the past. And as you can see, you only have 2 months here that have a negative expected return all year long. Now, this is the sum of the 1, 4, and 10-year cycles in 2025. And again, we have the 1-year cycle, the 4-year cycle, and the 10. And as you can see, it's easier to look at the composite. We looked at the first quarter in that slide a few minutes earlier. We looked out to here. But you'll notice there's an April high, then down May into June, then a rally from late June, from late June up into September, the usual September-October decline. So that's what the 1, 4, and 10-year cycle tells us. So here are the modifiers. First of all, there's the December effect. The action in, or is that that's December, correct. The December effect, which we'll see in the next page. Then there's years ending in 5 are the most bullish in the decennial pattern, but years after the elections have had the worst returns in the 4-year cycle. So that's the next two modifiers. We'll look at these in the next few slides. A reduction in performance is confirmed by the fact that since 1950, back-to-back, plus 20% years have been followed by positive years, but gains were reduced to about 10 to 12%. So what I'm looking for is an up market by the end of the year, but only up about 10 to 12%, not what we've seen in the last 2 years. Bullish sentiment last year was at a high. In other words, the percentage of days in which investors were bullish by several metrics was excessive last year. That's 2 years in a row. I do not expect, when that's happened in the past, you don't get stellar returns in the year after that. So that is why I'm concluding and expect a 10 to 15% increase in volatile trading. Now here's the December effect. This is December up or December down. The Dow Jones Industrials from 1885, 61% up in the next year if December is up, but if December is down, it's only 55. S&P from 1928, December up. S&P's up 66% of the time in the following year, but it's only 52% when December is down. And the NASDAQ, which is only from 1980, 68% up when December is up, but 59% when December is down. So this is one of the, I mentioned the modifiers. That's one of the modifiers. So here we resolve point number 2, which is the cycle conflict. The year after an election has traditionally been the weakest in the 4-year cycle, but years ending in 5 have been the strongest in the decennial pattern. Which has the upper hand? Here is the analysis. From 1928 to the present, the S&P...
Oh, got to pay a few bills, Bill. This is really good stuff, Bill. Thank you so much for being our guest. Bill Sarubi, folks. We'll be right back. Stay tuned, please.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're back with Bill Sarubi. Bill, the question we have from someone, a modifier, would you give us a definition of what the modifier is? That means something that could change the picture? Is that what that means?
Yeah, I'm just saying that it is not as bullish as one would think if you're just looking at years ending in 5.
Okay. All right. That's the questions answered. Thank you so much. Please continue.
Here is a cycle conflict. The year after the election has traditionally been the weakest in the 4-year cycle, but the years ending in 5 have been the strongest. Which has the upper hand? And here's the analysis from 1928 to the present. The S&P was used, earlier price data derived from the Dow Jones. And as you can see, there were 6 years in which there were conflicts. In other words, there was an election in 1904, but 1905 was a year ending at a 5, and the market rallied 39%. So you can see the market gained in 6 out of 6 cases. And it was only 3% in 2004 and only 9% in 64. But so it's the fact that it is the year after the election is not a big concern, because the year ending in 5 more than overwhelms the bearish effect of the post-election year. And here are the S&P results. Now we're in January. The S&P rose 2.7%. This month, as well as April, are 2 important harbingers for the coming year. The tables below depict the effect of January on the subsequent months under 2 conditions: up in January or up at least 2.5%. So the first table, if the market is up in January, 1, 2, and 3 months later, the market is up 60%. 2 months later, it's up 66%. 3 months later, 75%. But if it's up at least 2.5% higher, you can see there's a slight improvement in the numbers. 1 month is 61%. 2 months later, the market was up 71%. 3 months later, 79%. So that obviously is bullish, and I say it's somewhat mitigated by the fact that February in post-election years has been the weakest in the 48-month election year cycle. So these results will be a little mitigated.
Okay.
Now this is one of my favorite graphs. This is hedge fund launches. And as you can see, they peaked over here around 2009, 2010. And let me just say that the minute the market topped in the year, was it 2000? I said, whatever, everybody's going to run into hedge funds, and all these guys will be fundamental Freddies who have watched the market go up for I don't know how many years. They're not going to be able to do it. And according to a study I read in Ed Davis Research, I think, the hedge fund failure rate went up 40 times. That's not 4, it's 40 in the years after that, because what do they know about timing? And so here is a decline in the formation of new hedge funds, and this dramatic drop from 1,004 down to 172, and this isn't even updated, tells me that one will need market timing, applying contrary opinion. So what does that imply about the market? That it will be very volatile this year. This is one of the reasons I think it will be volatile. The other reason I think is nobody knows what to expect from the White House next. I mean, we could be playing on a golf course in Gaza within a year. So it's a volatile year, but I think it'll be higher. And contrary opinion, is this a sell signal? Hindenburg Research, a specialist in shorting stocks, is disbanding. Actually, the boss said shorting stocks was just too stressful. I discount. I don't think it's a contrarian sell signal. But I do think this is a bullish harbinger for the U.S. market.
For the dollar, yeah.
Trump wins, election special, the world loses, and there's the Statue of Liberty shooting itself. So that I would regard as bullish for the dollar and for the U.S. in general. So the big change, however, in the summer of 2024, I wrote that technology was unlikely to continue its ascent, but that the market would move higher. Therefore, other sectors would have to assume the leadership. As you will read in the sector section, tech has dropped to 7th place, and financial and consumer discretionary have risen to the top. I think this is the big story for 2025. You're just not going to get the bang for the buck out of technology anymore. And right now, this is the sector scan just run on Saturday. Consumer discretionary, number 1, communication services 2, financial sector number 3, and you can see energy is dead last with materials, real estate, and number 7 is technology. I don't think this is going to change a lot. I bought a lot of financial stocks. So too much money. I usually look at auction markets, but I like this is better than any auction market. Baseball star Juan Soto signed with the New York Mets a 15-year contract for $765 million. That is $51 million per year, $314,000 per game, about $90,000 per at bat, and about $131,000 per hit. If you're a long-time baseball fan, you can remember getting very excited when Mickey Mantle and Willie Mays both broke the $100,000 annual salary barrier. This guy gets $90,000 just for walking to the plate. And by the way, an added note, in terms of baseball, Soto will be 41 by the end of the contract. Ball players, as we know, tend to peak in their early 30s, so the Mets are going to be paying him well past his peak days. They had to give Robinson Cano $48 million after he stopped playing ball. So this is a sign that there's simply too much money. It's a little bit different than the auction markets, but it tells us the same story. As a NASDAQ daily, now I think you're looking at a trading range right here. I think that's what the let's see. NASDAQ was well off this morning with Google, but it has bounced back up. It is more or less flat now. I think you can expect that through Q1. There's the NASDAQ seasonality. February is the second weakest. No, it's the third weakest month, depending on how you want to look at it. It's one of the 3 weak months in the year over the last 45 years. Now, Cycles Research stock screens and cycles. Stocks plus seasonality plus relative strength equals profits. And this is strong stocks for the S&P 500. Right at the top, we have VFC, which I believe is a clothing store. Then we have Fox. BKR is Baker Hughes is drilling stock. DRI is Darden, the restaurant. Comerica, I see in there, Kroger. This is a list that I picked from. Now, here are the bearish stocks. Here's where I get the sell candidates from, the shorting candidates, Regeneron and Biogen, both, you'll note, biotech stocks, Constellation Brands, ConAgra, Lennar, Merck, Dollar Tree. So this is one I picked up as a buy. This is Cracker Barrel. Obviously, I think you know this stock, but it's hard to find stocks when everything's moving up. How do you find something that's bottoming out? Well, you'll note Cracker Barrel is breaking this downtrend line, and you're seeing the telltale higher lows in momentum, and you see the bottoming relative strength. Now, the relative strength, usually you want to see at least 6 months of relative strength or 6 months without it making a low. Well, August plus 6 is February. So this is the most recent stock that I bought, and it came from those lists. And here's the CBRL Cracker Barrel seasonality. You'll note we're in a strong part of the year up until April.
Got to pay a few bills, my friend. Stay with us, folks. We got Bill Sarubi coming back for another segment. Can't miss this stuff, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Bill Meridian, Cycles Research. Please continue, Bill.
We were in Cracker Barrel here. Buy signals. Yep. There's the seasonality. See, that's the annual cycle of the year. That's static. This is dynamic, however. It indicates a short-term peak here, but it indicates a high here. So this is the dynamic cycle. So Cracker Barrel's a buy. Now, back in November 2024, I was on your show. I said the market is likely to close higher in January 2025 than it was in 2024. And I recommended diversifying out into financials and industrials.
I certainly remember that. I certainly do. Yep.
Now, here's the strong months for tech. You can see February is not a strong month. And here's the 10-year. This is out of place. 10-year note cycle is rising. But remember, next month, March, is third week of the month is Death Valley. That's when it really gets clobbered. So up until about the middle of March, I'd be bullish on the 10-year note. Oil is in a favorable period. It is right down in here in February. And as you can see, we don't get a high until April or May. But let's look at the cycle. Here's where a problem is developing. You'll notice that the price peaked well in advance of that cycle. I ran the diagnostics on the cycle. It's still valid, even though it has failed. So I think this is the fundamental uncertainty being introduced by the new administration. So I really can't tell you much on oil right here. Now, gold, I'm pretty confident, is going to go to 3050, 3100 because you take the height of the rectangle, you project the price up, and you get 3050. Now, here's a breakout that's just occurred, and that is out of a triangle, and that counts to 3100. And that just occurred. So I think gold is headed to 3050, 3100, probably sooner rather than later. And March is the weakest month, but do I have that in here? But it is not that weak. Well, there it is. This is based on 159 years worth of data. So, but you can still see there's a 50% chance of the market going up. But if it does go down, it gets clobbered. But it's the only weak month in the first 5 months of the year. Now, cycles, a little self-promotion, ranked number 1 for market timing in 2002 and 2016 by Timer Digest, an independent rating agency, and ranked number 3 in stock market timing over 19 years versus 170 other services. And I've been an advisor to Frankie Joe for 10 years, one of the Wall Street's greatest traders. And from last November, I recommended Tesla. Now, that was the chart at the time that I recommended on your show. And what drew my attention to this? Well, look at November.
Mm-hmm.
That's the expected return. Now, let's look at Tesla. That was the dynamic cycle. That's the static cycle. They matched, so we bought Tesla. NVIDIA, not overbought yet weekly, breaking out of an ascending triangle, relative strength hitting new highs, and look at the month of November. And now this is, did I just do Tesla? Yeah, this is out of place. Sorry about that. But this is Tesla for November. So this was another projection made under the November 7th show. Grindr, which is the LGBTQ plus, don't want to leave anybody out, dating website. And there's the cycle right there. And there's a topping period right in here, December, January. I bought the stock for myself at 8, and I sold it around 18. And it is now in this little topping period, and that was the chart that accompanied it. So, if you're looking, this is an an ascending triangle that broke out with about a 9, about a 17, 18 target. So this told me the direction, this gave me the target, relative strength hitting new highs. How did it work out? Well, here we hit the cycle top and the price top came down into the 16 area and has now run back up. I predict it will come back down and it will be a buy again at the end of March. So, and we do make these studies are available, such as this one, for anybody's portfolio. You just email me at cyclesresearch@gmail.com for details. Daily, weekly, or monthly cycle runs, and it gives you the past performance, and it gives you forward predictions. And Ed Dewey's cycle book is again available from the foundation. That's the original book that got us all into cycles. So it is back again, and it's a nice new format. And by the way, I mentioned one stock I'm buying tonight before the market closes, which is MicroStrategy, because the stock popped up on the stock screens, and you saw the Bitcoin example up here for the first time. According to this, today's a low. So I'm buying MicroStrategy, but I am shorting Netgear, which shows cyclical weakness. They both close. They both report after the close.
That'll be good to watch. That'll be good. Netgear and Bitcoin. What's the symbol for Netgear, Bill?
NTGR, and MicroStrategy is MSTR. And MSTR, it is loaded up with Bitcoins. That's the reason it moves with Bitcoin. So here we have one part of the program telling us that Bitcoin is at a low. On the other part of the equities part of the program is telling us that MicroStrategy is a buy. So I put 2 and 2 together and think it's worth a trade here. And Netgear, I don't know what's going on with them fundamentally. I can't carry. I don't have Arabs asking me what the fundamentals of the stocks are anymore, so I don't really know. And it reminds me of the story. I once met one of Smith Barney's greatest traders, and I used to walk past this guy's desk going in to see Alan Shaw and the technical gang, and they always talked about this mythical guy here. And I think he's up on the 99th floor in a corner office. They said, "That's the guy." I said, "That guy?" I said, "He comes in, he looks like he's stoned most of the time." And they said, "No, he's got a tremendous trading record. We don't know how he does it." And so I asked him about it. And he said, "Well, Bill, I just bought this company. They got this factory, and they make things." Nobody could understand why he bought the stocks. He was just very successful.
Well, who knows? Hey, listen, thanks for joining us today, buddy. Sure. Is there anything else you want to cover? Because tell the folks we got another minute and a half, how the folks can reach you if they'd like to get a copy of your letter, maybe even subscribe. That would be a good idea for them. Well,
there were 3 websites. Cyclesresearch.com, it covers most of the cyclical technical stuff that you've seen here, and BillMeridian.com and the new BillMeridianAstrology.com. One site connects to the other just by pushing a button. We'll tell you about the newsletter, books, or other planetary services.
Very good. Okay, listen, thanks for joining. By the way, I want to ask you one other question. Have you heard? I haven't heard from Alfie Lavoie. Is he okay? Do you know? Because I usually hear from him about once every 2 or 3 weeks, and I haven't heard from him. I was going to call him today, but I think he's okay. He's in his 90s now, but he was pretty good health when I talked to him last.
Okay. Well, I really don't know.
All right. Hey, listen, thanks for joining us, my friend. Yeah. Bill Meridian, folks, Cycles Research. Bill, thank you so much. Great show. See you tomorrow, folks. May God bless.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, these are the 2 stocks that Bill talked about. This one he's bearish on. This is Netgear. Have no idea what they do. Probably something to do with gears. He's bearish on this one. Okay, and then MicroStrategy, which is Bill, what's that guy's name? Saylor? I don't remember his name. This one looks bearish to me. I mean, it's right at the 382, but he's bullish on this one. And let's write that in, and we're going to, see how it does the next time, because we like to see how well you do that to me every day. So we got to, he's bullish on this one. And believe me, folks, this is the kind of stock that if he's bullish on it, it could do something like this. And remember, he said that the cycles for the Bitcoin were really bottoming. I haven't looked at Bitcoin for several days, but that's another one we will keep a look at for tomorrow. What we'll do, we will review these tomorrow, because just for fun. Bill's very good at what he does, folks. He gets mega bucks from the air. Well, he used to while he worked for them. While he did those, I think he was there 13 or 14 years there in Abu Dhabi. I went over and visited him a few times, but he was their number one go-to guy, especially with precious metals and the stock market stuff. He does great cycle work, and we'll see what's going on here. So that's what we're watching here today. Thank you for joining me, and hope you made a couple bucks on the meal trade, and we'll have some others looking at it. Let's see where we are. Anything going on? I think we're almost there in our Dow Jones, folks. It's just about there, pretty close. Yep, we're almost there. There were only 49,959 right there. I would be recommending being a seller there, folks. I certainly would. And that is an ABCD at a 786. And that is what you like to see looking at it. We've got to 49.26. So far, the high has been 49.59. And that's one that looks pretty good. Now, the NASDAQ one had already hit, and it's quite a bit below that number already. We'll just take a quick look at it. There was the number. You see, we've came down dropped about 80 pips. And but that was a completion of that pattern right here on the long-term daily, exactly at the 786. Now, of course, with news coming out, these can fail in a heartbeat. That's why you want to have your stops just a little above, a few $100s above those points, so you don't have to risk very much. So live every day in an attitude of gratitude, and may God